Welcome to the India FinTech Diaries, the only podcast focused exclusively on the Indian fintech market. I'm Elroy.
And I'm Hemant. In each episode, we dive into the latest trends, ideas, innovations, business models, and personalities that are shaping India's fintech landscape.
We also invite amazing guests who are innovators and industry players that are driving the change that is helping make financial services more modern, innovative, and inclusive in India. Come join us as we explore the changing landscape of fintech in India.
Welcome back to India FinTech Diaries, where we unpack the ideas, infra, and people shaping the future of financial technology in India. I am Hemant.
And I'm Elroy. Today, we're diving once again into a part of fintech that almost every globally operating business touches, but very few people truly understand. I'm talking about cross border payments. And despite trillions of dollars moving globally every year, the experience for most Indian exporters, SaaS companies, freelancers, and even global first startups still feels very surprisingly outdated. Slow settlement times, opaque FX pricing, endless paperwork, swift messages that just disappear into what many teams just call as black boxes. In fact, India's inward remittances crossed 135 billion in FY25, while total exports touched roughly 860 billion according to RBI and Ministry of Commerce data. And as more and more Indian businesses become global from day one, the underlying payment infrastructure suddenly becomes a lot more important.
Absolutely, Elroy. I'm super excited about this episode because it's a very complex problem. And the more complex the problem is, more fun the episode. And to help us unpack all of this, we are joined by Anand Balaji, CEO and co founder of Xflow. Welcome to India FinTech Diaries, Anand.
Thank you so much, Elroy and Hemant. Pleasure to be here. I've been here listening to some of your podcasts since 2022, as I was telling you before we started. I think that was the first time I heard you guys talk about cross-border payments. We had started in 21, so I was definitely following what's going along there. Yeah.
Awesome, Anand, and you've had a fascinating journey and look like you were on a mission to do a tick mark of all the big names in tech and payments. So you have spent time across Microsoft, Amazon, and Stripe. So share a little bit about your background for our listeners.
No, it's funny when you put it like that, but yeah. So I was pretty much an accidental fintech person. So I, like you said, I was doing this tick mark of all the large companies. When I was at Amazon, actually, I was part of the team that launched Amazon here. Really fun 2 years, just figuring out how we launch Amazon as a pure marketplace in India. We had to rebuild a whole bunch of the Amazon systems to make that happen. And then I was focused on customer acquisition for Amazon for a couple of years, partnering with OEMs, operators, doing fun stuff. What we did here, we ended up exporting to the rest of the Amazon universe worldwide. Then, very accidentally, one of my friends, who's a founder himself, was, I think, approached by Stripe to sort of be the first employee here. I think Stripe likes founders, right, as the first employee on the ground because, as you would expect, there's just like too many things to do. You don't want people who are too focused on just one role or one function. And founders are awesome that way. But he wanted to continue building his startup, so he reached out to me and said, "Hey, there's these folks from Stripe. Can you help them?" And I'd heard of Stripe, so I thought, good karma. Let me figure out who in the Amazon payments team might be a good fit for Stripe, because naturally I assumed they'll want someone from the payments universe. And like many Bollywood flicks go, as I was trying to sort of matchmake them with somebody in the team over a period of time, both Stripe and I got interested in the role, as they say it, and then eventually I ended up joining Stripe myself. So it was quite a comical journey at one point. My wife couldn't believe what was happening, but I had no background in payments until then, right? Like I'd worked on, for example, to give you a really simple example, I'd worked on the Amazon launch. We knew we couldn't launch without cash on delivery. I went and told the payments team, "Hey, we need this." And the payments team took a while, and magically we had the cash on delivery option on checkout. That's the level of my knowledge of payments before I joined Stripe. So it was a steep learning curve there. Really dug deep into what happens when a card is charged, when a wallet is debited, what settlements mean, how settlements are separate from when the card is charged, what happens in between if there are disputes. Like I was blissfully unaware of the entire process there until Stripe. But then over the 5 years I was at Stripe, I think we fell in love with payments. My two co-founders also were at Stripe with me when we started Xflow, and sort of decided that payments is what we really wanted to do. Just fell in love with it. So yeah, much more of an accidental fintech person, unlike the two of you.
So if you look at it from the outside, people assume that global payments are already solved. Money moves digitally, SWIFT exists, banks are more or less connected to SWIFT either directly or to correspondent banks. But when you actually speak to exporters, finance teams, the experience sounds very painful. In fact, most folks don't know what's going to happen, when they're going to get the money. There's no certainty of when the payment will hit their account, at what rate it will hit their account, right? And settlement times are very, very unpredictable.
Yeah.
Now, in this era of instant payments, how widespread is this problem?
This problem is widespread across all segments, right? Like when you look at cross-border payments, and if you look at the entire universe, you at the beginning you spoke about remittances, right? Like
Right.
about 135 billion into India. That's just the P2P part of it. That doesn't include the B2B and the B2C
Correct.
aspects as well, right? So there are all these different segments. The most funny thing that happens when I in social circumstances when I tell people I'm doing cross-border payments, they're all like, "Hey, I need to send fees for my kids' education abroad, and it's a real pain. Can you help with that?" Right from that, almost everybody feels it. We
Yeah.
focus mainly on B2B. When we spoke to, even before we started Xflow, one of the exploratory journeys the three of us did to discover what we really wanted to build was to speak to a number of merchants on what their payments problems were. We just knew we wanted to build something in payments. We hadn't decided at that time cross border is what it was. Over a set of around 80 to 100 conversations, it became very apparent that cross border payments was stuck in the 1900s almost. What you just said, right, was true. I remember talking to the Stripes founders when they started in 2011, and everybody thought payments were solved. What is there to do? Card transactions work. Why do you need
Right.
Stripe? That was exactly the same question they had. Which was funny, given the way you framed the question as well. It just took me back there. But when we spoke to merchants, when they explained what goes on, right, the one story or thing that just stuck with me, anecdote that stuck with me is I remember one merchant telling us today if I send my customer an invoice, let's say it's $100,000 invoice, and my customer says, "Hey, I wired it." After that, it's a complete black box. I don't know when the money is coming. If it's been a couple of days, if I go ask my bank, they tell me I don't know where this money is. I don't know how much INR I'm going to receive. I don't know. I can't track any of this anywhere. And in case the money goes missing or I can't figure it out, apparently his buyer gets this in only 30 odd days. And he said this is just crazy. Like he compared it to the current Google Pay and Phone Pay UPI
Right.
experience, right, where it's all so quick and instantaneous, whereas this was just like filled with all these unknowns. And not this is not even talking about all the compliance thing that comes everywhere, right? This is, in some sense, if you equate it to a e-commerce world, imagine you ordered something on Amazon, you don't know when you're going to get it, you don't know how much you're going to be charged for delivery. Like none of us would put up with that experience. But
Yeah.
somehow cross-border payments is stuck in the 1900s, and it became plainly obvious to us that this required solving. And even to date, when we speak to people and when people start using Xflow, it's amazing. They just can't believe this is possible. The ease with which they're able to receive payments, and now we are going to be also enabling sending payments out. We have an existing line of business where we help some businesses pay their recurring bills for software services they take in. It's like there are so many elements. If we start breaking it up into all of this, almost all parts of it are broken in different ways. And so before we even started, I think those conversations really made it clear to us that this is a huge gap. You can argue when we started, like there were folks, there was a Wise, there was a PayPal, there's a bunch of people doing different things, solving different areas. Stripe themselves was enabling like cross-border payments for Indian exporters then when I was still there at Stripe.
Right.
But the big gap we saw was just the B2B space was completely neglected. And even in other spaces, there were tons of work that still needed to be done. While Stripe existed, I knew a big complaint from merchants of Stripe and PayPal was it's just too expensive. The cost was very high. There were declines, there were disputes. The dispute rate was just much higher for Indian merchants. Like there was number of different issues that just didn't make the payment experience at all straightforward. And everybody compared it to the domestic experience, and the domestic experience was just way smoother. So it just felt like this needed a reboot and almost reimagination of the experience, and that's why we got started onto this.
Got it, got it. And towards the end of your answer, Anand, you touched upon it. For example, whenever we talk about payments, people talk about speed, but you touched upon the point that there is immense amount of fragmentation as well, which is across Swift messages, correspondent banks, purpose code, FIRC documentation, manual reconciliation. I am out of breath, but the list has not ended, so it's endless. So,
Yeah.
in this complex and fragmented orchestration that needs to happen for a successful cross-border payment, is there a specific areas or points where the traditional system breaks down the most? Actually, it breaks a lot of places, but where is the big problem?
Like you said, it's across the board. And by the way, I must say, this is the first podcast where we're getting into FIRCs and all that. I feel my nerdy part of my brain is very excited. But going back to the question, right? I think almost all parts of it. Like I think the if you had to pick one, I would
Yeah.
say like the biggest thing is I think if you go back to when Swift was designed, right? I think in the if you go to those times in the 50s and 60s when the access just wasn't there. So if you had to send money internationally, it was just plain difficult. Like how do you coordinate between one bank here and one bank in the US, and how do you sort of make sure this happens? And for that time, Swift ultimately is a messaging system, right? But it was an amazing innovation just to connect banks internationally. And if you see what the problem statement that Swift was solving for, it was solving for access. They were not solving for experience. They were not solving for speed. They were not solving for cost. They were not solving for the predictability, which, if you look at most domestic payment gateways, they solve for all of that. They solve for like the overall experience, what we call in the industry payment guarantees, right? We should be able to tell someone when they'll receive the funds, when how much will they be able to receive. Like these are all simple payment guarantees that exist in domestic payments. But Swift was designed so far back that it was only solving for access. So I think that's the big sort of unlock. If you can now sit back and say, if I had to redesign a system that doesn't solve just for access, let's take that as granted, but now solve for the experience, the merchant experience, the customer experience, speed, cost, transparency, visibility, tracking, then you wouldn't be designing Swift the way it was. But now the problem that people have is Swift is already there. And so whenever people, like, there are versions of Swift that are out there which are trying to improve some of this, right? But the adoption is super low. There's just no predictability in that. And I think that's why I said we actually felt we had to reboot this whole thing and just think about speed, transparency, visibility, cost first, and see how can we redesign this. If you had to build this now with these things in mind and build for the exporter experience or the importer experience as we launch that, then how do we actually like design a slightly different experience? And I think that's really the unlock if you had to pick one.
And Anand, if you look at it, BFSI or fintech is always very different from a e-commerce space or any other space. Considering one of the major friction points continues to be and sometimes is the regulatory friction or the certainty around regulation, clarity around regulation. But seems like RBI has recognized that and is pushing for faster settlement times and better transparency for inward remittances. And shift like PACB framework introduction is trying to solve that. Do you think that as an ecosystem, in addition to the players like you are trying to really push for a better experience and speed, but is the ecosystem finally reached an inflection point where the peripheral components and peripheral infra are available where we can modernize the cross-border payment to the level that you're talking about?
Yeah, I think the infra is there. Even before PACB, when we started, actually, when we launched in 2022,
Right.
we were able to give next day payouts, fully trackable, all of that, right? Even before PACB happens, we didn't have any transaction limits at all. Like that was one of the cornerstones of our design, actually. Like when we were thinking of a B2B experience, at that time, the limit on what was then called OPGSP was just $10,000. And most B2B merchants just couldn't use that. And you're like, hey, this doesn't solve B2B, right? Like, how do we actually go solve it? So I think what we discovered is there are ways to be able to support it, which are already regulatorily compliant. We just have to go build a lot of tooling at our end. So for us to be able to deliver that, we had to build an entire transaction monitoring system. Build. I know I'm with fellow nerds here, so I can talk some of these
Yeah.
payment specific terms. We had to build our own compliance engine. We had to actually like figure out how we will track politically exposed people, all kinds of signals on transactions real time to be able to identify the malicious transactions slash actors from the real ones, right? And without that, we couldn't go live. And that was one of the impediments why B2B payments didn't see any innovation at all until we got going in 2022. For when we got started, we knew this was going to take time to build. I couldn't go live in 3 months. Most
Yeah.
startups typically aim to go live quickly, get feedback quickly, keep iterating, all of that. It took us 15 months to go live from the time we got started. So it was a long process, right? And sometimes you need to be in the right place at the right time. I think we happened to meet the right set of investors who believed in what we were building, understood it's going to take time. It's not something that we can roll out in 3 months. So I think some of those things come together at the right time. But I think now the ecosystem is slowly gearing up. Like PACB is definitely an improvement over OPGSP, which was the
Yeah.
earlier way to do it, right, for online payments. So we also have the approval for doing the online payments via PACB, but we also continue to build our business, which we built for exporters, which is not necessarily online. So there we enable all kinds of B2B transactions. So I think the ecosystem is getting there. I would say it's not yet fully there because I think there is still a lot of awareness issues. Like when we meet a lot of merchants today, like the freedom with which we are talking about PACB is not yet fully understood by everyone. And so we have to tell them what online payments are and how PACB helps there. And if their payment is not online, we have to educate them that there are alternatives to Swift, because everybody assumes Swift is the only way. It's been around for so long that sometimes people are not ready to believe there's an alternative. And their thing is, if there was, I would have known one already, right? And
Yeah.
so we have to like literally go educate people sometimes on how there is a better experience out there. So I think is the ecosystem getting there? Yes, I think getting customers also into that space so they also know there are better alternatives. I think slowly that's building up. I think there's more now coverage by people in the press as well that hey, there are alternatives to the Swift approach, and these are all regulatory compliant as well. Like we ensure that through a compliance desk we solve for all the FIRCs and all the compliance requirements that our customers have. So that makes it easier also for them beyond payments to also track all of these documents so that they are not left to fend for themselves on this. So all of that is coming together. I think in the next couple of years, I think you'll see a massive spurt in people going towards non-Swift ways of actually receiving payments or sending payments.
Anand, I think this is a perfect time to pivot into what Xflow actually does. So, for our listeners hearing about Xflow for the very first time, how would you describe what the platform actually does?
Yeah, very simply, we want to simplify cross-border payments, especially B2B cross-border payments. That's the way to think about it in one line. Today, we help exporters receive payments from their customers without any friction. They use us to send invoices to their customers anywhere in the world. Their customers pay using local payment rails that they know, local bank-to-bank payment
Right.
rails. And most countries now have, like India does, they have a really good and efficient, almost real-time local payment network, bank-to-bank payments. So we provide Indian exporters with virtual accounts in multiple countries. They can receive payments from their customers through local transfers for their customers. We then aggregate all of this, bring it in, and pay out through our bank partner here to the Indian merchant. Ultimately, the licensed entity here in our setup is the bank partner. We work with some of the largest banks in the world, so that we can actually avail of speed and cost advantages that we can deliver to our merchants, so that for them it's a very simple, transparent experience. They know exactly how much we are charging them. They know exactly what the mid market rate is at the time their transaction was processed. They know at the time when they choose to withdraw money, they know exactly how much INR they're going to receive the next day. Payouts are always next business day for them. They don't have to second guess when they're going to get it. If they don't see it, they can always track where the money is and know when it's going to get paid out. So now it's so much of a simpler experience, and the documents they need are delivered to them the day after the payment arrives in their Indian bank account. It's what's the equivalent, right? It's like ordering something on Amazon. You just get it. You know it's going to happen. Like you're not thinking twice now.
Right.
And that I think is the greatest thing. Like for most of these people, like before with the earlier system, there was so much follow up, so many emails to send. Depending on the bank, sometimes you have to go to the bank branch physically to get payments released. It was just a very ridiculous experience for today's businesses, and this just makes everything work in a much more modern way for exporters. We are also going live soon with importers being able to pay similarly, right? Like a lot of companies now pay for services like say your OpenAI or
Yeah.
Claude and all of that, and like that those payments are pretty painful now, and those payments are going to become very simple for Indian payers paying out as well. So very similar experience on the way out. So think of us as just like focusing on B2B cross-border payments and simplifying that experience for exporters and importers.
I want to also understand is you talked about a lot of features and functionalities that are there across Xflow, right? But if I have to break it down from a architecture standpoint, right, what would be some of the core components or modules that you would actually have under Xflow?
Yeah. So at the core of it, right, is what we call the money movement layer.
Okay.
Like an easy way to think about it is the storage and compute layer of AWS.
Right.
That's really our core. Without that, nothing exists. So the money movement layer essentially allows us to receive real-time payments from our customers, payers who are anywhere in the world, move it to India and pay out our Indian exporters, no matter which bank they have an account with. So that's the core. That's a simple, how do I move money from point A to point B?
Yeah.
On top of that is our product layer. So we have products around FX. Just to make it real, an example of an FX product is most businesses, when we got started, were worried about or were always trying to optimize for the cost of conversion from USD to INR. A lot of time was spent on it. How many paise on a dollar, this, that, all of that. But one thing that people never did much because they just couldn't was figure out what time in the day should I move it, or over the next 2 days, what would
Right.
be a good time for me to convert. And that had a much bigger impact than the 1 or 2 paise they would negotiate on the cost of FX. So what people used to do in the absence of Xflow was they would pay banks to develop a 30-day, 40-day forecast on where FX is going to land. Some analysts would actually like get a actual report done and send it out, and then you would sort of see how do I optimize here. To make it much more actionable, we took a much more real example of what people do in the stock market already, which is set a limit order. So all of us who have traded on the market at some point set limit orders on, like, if stock hits this rate, buy; if it hits this rate, sell. Everybody is familiar with that. So what we did was we built using AI, just an FX AI analyst, as we call it,
Yeah.
which gives a prediction for 3 days on where FX is likely to be. It just analyzes signals online, a whole bunch of them, and provides a forecast with a 92% confidence interval. And the actionable piece there for the merchant is then they can say, hey, if the dollar hits 95 on the rupee, convert my balance from USD to INR. And we are
Okay.
seeing, especially now when there's more volatility, people are able to actually gain much, much more than the 1 2 paise they
Right.
were sort of negotiating with their banks on the price. Because so far, banks would never tell them when they are converting; they would just tell them this is the price. Now suddenly people are feeling that our customers at least feel they have control over what rate at which the conversion is happening, and that has so much more impact on things, right? So that's an example of an FX product. Similarly, compliance, we have products there. Like I said, we help customers get the FIRCs from their own many banks. So we built a range suite of products there. We've built a suite of products around fraud detection. So there's a whole range of products beyond like the core money movement in terms
Oh,
of
yeah.
just the architecture. And then, of course, the third lever, which we are slowly starting to exercise, is we will expand and provide these services in many, many more locations. So today we service India.
Yeah.
We are now licensed in Canada. Literally last week we got our in principle approval in Gift City. So this is hot off the press. So the intent of all of this is we have customers who are actually present in these other locations. We have applied for a license in Singapore, for example. So as we expand the countries in which we get licensed, we can actually service customers in those countries, as well as some of our existing customers who are there in all these countries. So then for them, like, it's a very Stripe like model. I'm not inventing anything right here, but essentially if you can use Xflow in India and you're also present in Singapore and US and Gift City, you should be able to just extend capabilities and use it there. So these would be like different sort of product suites you can think of almost on top. The country is like the third lever of expansion. And the last one, which is more long term for us, is just how we move money, right? Today,
Yeah.
we work very closely with our bank partner to move money. We now do next day payouts, like I was telling you. Very soon, we're going to announce same day payouts, which is kind of unheard of in India. So people are going to very pleasantly be surprised to receive their money on the same day that they withdraw. And over time we will look at, are there more efficient ways, right, of bringing money in? Are there even more cost effective ways of bringing money in? That's much more at the foundation of the money movement layer. So those would be the ways to think of how we've architected Xflow.
And Anand, I was gonna ask a couple of questions with my CFO hat on, but I think on the rate bit, you've got a jump on me. So you've already covered the rate, but let me cover the FinOps bit. You covered FIRC, but then
Yeah.
there is a endless list of paperwork. FIRC just being one. So can you help us understand or double click on the different elements or value props that you have from the point of view of eliminating the back office complexity or the FinOps complexity for the B2B player?
Oh, excellent. Like, so there's number of different things there, like you said, right? Like, so It starts with for goods exporters especially, but later in the year, I think it's going to also happen with service exporters. Is what is called the EDPMS compliance.
That's right.
That's where the journey starts, right? So we help simplify that through the compliance product we have. We help generate the FIRC for a lot of large customers who also do. They want predictability, a different kind of predictability on the FX. So they want to be able to lock FX rates 30 to 60 days in advance. So I know I'm bringing in, let's say, a couple of million each month to pay salaries in India. I'm bringing it from my own entity in the US, and I need it to be brought to India. Every month on the 26th, I'm going to schedule this transfer. And most CFOs will want to have some kind of predictability there in terms of how they do it. Depending on the size of the company, they would want to lock rates or they will want to execute what are called forwards.
Yeah.
So we have products to simplify that as well, right? Like, so we can lock rates 30 to 60 days in advance. We're working on launching a forwards related product. So CFOs can just like set it up very easily in Xflow without having to like go and sign multiple different documents with banks to be able to do something as simple and basic as that. So that's another suite of products that is there around the CFO line. If you're in a SEZ, then you have a different set of documents to comply with that. So there again, the compliance desk helps sort of automate a bunch of those requirements. And where it's not fully automated yet, we work with their many banks to get all of those documents released. So therefore, the experience for the end exporter is one where you go to Xflow and payment and everything around payment just gets handled, and you can just like through the Xflow dashboard just manage all of these things.
Anand, that's extremely interesting. And I think the other interesting thing that I noticed about Xflow is that you also provide infrastructure to cross-border payment platforms. So talk to us a little bit about the infrastructure play and what you're doing with Xflow for platforms.
Yeah, so I would say from day one, this was our thesis, and we saw this work really well at Stripe. So we again very blatantly copying a thing that works well. So what we realized was if building this infrastructure and running our own business is one piece of the puzzle, but if we can actually enable and provide this infrastructure to any other platform or business that wants to incorporate or include cross-border payments within their entire product experience, that then just unlocks many other new use cases, right? So it's just like
Yeah.
it's not things that we would have even imagined. So I'll make it real. So we started working with Drip Capital. They provide exporters with short-term credit. They just wanted to initially use our infrastructure to move money from US to India into the exporter's account. That was the initial starting use case. But then what Drip Capital started realizing was with the infra we gave them, they as a credit provider typically approve 1 to 2% of the people who apply for credit. So they do a whole lot of marketing, demand gen. They get, let's say, 100 odd applications for credit. Only 1 or 2 are approved. The remaining 98 get nothing from Drip. And they realized with the payment infrastructure we're providing, which is just as payment infrastructure much more superior to what these exporters are getting from banks, they can actually launch a payment product on their own, built entirely on us. This is very similar to how Shopify Payments rides completely on Stripe.
Hmm.
Shopify Payments is entirely Stripe in the backend, but just managed and branded as Shopify Payments. So it's the same thing in essence. And Drip now is able to offer payments to the customers who don't get credit on day one, evaluate them for 6-7 months, see the flows that they're seeing, and then eventually convert them to credit customers. And now they've actually built a line of business around payments, which honestly we didn't think of when we even started engaging with Drip. Forget when we built out the infrastructure itself. And so we are seeing interestingly many use cases like this. Now, local domestic PAs, for example, are using our infrastructure to extend their domestic payment capabilities now into cross-border using the API infrastructure we have. And so for us, like the ability for other companies to take advantage of what we've built has been part of our core design from day one. The API designs we've done, like some of the right ways of doing it, we've seen it work really well at Stripe. We make sure customers on our APIs never have to upgrade just because we make some changes. So the design principles going into making sure really good infrastructure is built and supported for customers who want to integrate cross-border payments, build their own experience on top. There's this other company called Inkle, great example as well, right? Like they help companies that are in India, which also have entities outside India, let's say in the US, help them with the compliance in the US on the tax and legal side. But they were then able to integrate payments into that experience by saying with the one click, you can move your funds from your US entity to your India entity. It was entirely an Inkle experience, but powered by Xflow. So these things make it super easy for others who want to build products on top, build new lines of businesses, all of that. And the power of building this infrastructure to us was like very obvious when we spent the time at Stripe, and we felt apart from just solving for B2B payments, this was a big gap as well. Even today, nobody provides really reliable infrastructure for other platforms to really integrate cross-border payments into. So for us, that was a major piece to build, along with solving for overall B2B cross-border payments.
Anand, that actually brings me to my next question, right? One of the things I keep doing is looking at the list of entities that are licensed by RBI. And what I've noticed is in the last couple of years, we've seen a wave of fintech infrastructure players entering the cross border space. In fact, including you, there are today 30 plus entities currently licensed under PSEB. So, how do you think about competition? Are all of you actually competing for the same pie? Or are you trying to find profitable niches to exist in this space?
Yeah, I think it's amazing that there are 30, and I think there'll be more if you ask me. Like, there are lots of those who are not PSEBs who are actually integrated with Xflow and provide cross-border payments to their customers
Yep.
via Xflow, right? So there's going to be more. For us, it's amazing that there's so much visibility, and now there's a lot of regulatory sort of blessings as well to go solve this. I think the interests of RBI and Xflow are that way very tightly aligned, like to provide a much better exporter experience at much better cost, and to reduce the time it takes to move money. Like, I think the core principles are super well aligned. For us, like, I think I look at this as a moment where suddenly the doors have been opened a lot by the regulator in terms of saying, hey, here's a regulatory framework within which all of you will be directly regulated. And when I say directly, what I mean is, like, in the OPGSP framework that existed earlier, we could partner with banks. Banks were regulated, but the players offering OPGSP services were not directly. And that over time, it's a great way to start, but over time, it leads to its own set of issues where banks are always feeling like, hey, these fintech folks just keep doing whatever they want. They never get audited by RBI. We do, and so the incentives don't fully align. I think now with the we are in a place where fintech companies like us are directly audited and regulated by RBI. So the incentives are much better aligned to solve for what the merchant needs, while at the same time making sure we are doing things in a very compliant way as well, right? Like, so there's no like indirect regulation, but much more direct. So I think that makes the entire ecosystem grow. I think you'll start seeing much more awareness from consumers, merchants, and customers all in terms of using alternatives to their current experiences. So I think you'll see the entire market grow. In terms of whether all of us, given, if you remember, we spoke about, like, there's very broadly, there's the P2P, B2C, and
Yeah.
B2B sets of cross-border payments. You'll see different people focusing on different parts of it. B2B is arguably the biggest and possibly the most complex one in terms of just customer behavior to change. And that's what we've been focused on from day one, which is why we actually built something that works without transaction limits. We built out our own entire transaction monitoring system, so we can actually support very high. So we support anything from like 500 to $1,000 to even $10 million in a single transaction, which today only banks do. Despite the number of other entities there, nobody else does such high values of transactions, right? So for us, our focus will still be very core on the B2B side and on the infrastructure side, helping others build sort of B2B infrastructure as well, as we scale it up. And I think in general, having more direct regulation and having these many people get interested in this space will only mean the market just keeps getting much more expanded than where it is now. So overall, I think it's going to be a great place. So the next 5 to 10 years, I think it's going to be a very high growth place. And after that, I think we might see a little more of a consolidation phase. But right now, I think super early. It's the what I would call just after the infancy and more the growth years of cross border payments.
Anand and Elroy, for the last few questions, we have gone deep inside the cross border payments. For the next couple of questions, Anand, I want to zoom out a bit. Starting with, if you see, both infra is changing very fast, but the expectations are changing as well. And as you spoke about, that businesses are expecting real-time visibility, programmability, API first workflows, faster money movement, etc., etc. But parallelly, then there is a lot of chatter around. Earlier it was stable coins, then programmable global settlement infra. Now there's agentic payment. How do you think all these things which are happening parallelly are going to impact the future of cross-border payments?
Yeah, in many ways, right? And I think some of them I don't think we fully know yet. Like right now, if you look at something like stable coins, there's a lot of adoption in countries where the currencies are much more volatile, a little less in other countries. But even like today, for example, we find a lot of Indian exporters whose customers want to pay using stable coins, and these customers are in the US. So even that sort of understanding that, hey, maybe this is only mainly prevalent in countries with where the currency is more volatile is kind of sort of breaking up, and we see lot many more businesses wanting to pay with it. I think I still don't see, at least in publicly listed companies, I don't see people holding stablecoin balances yet. It seems like it all gets converted to fiat very quickly. But like there is still a lot of stablecoin usage now increasing, at least as a payment method to begin with, right? Forget keeping it as assets, but at a minimum as a payment method, it is gaining a lot of traction. So you will see us also beginning to support the ability to accept stablecoins from buyers of our exporters who want to pay using stablecoin. But like the potential with something like stablecoin is pretty big. The only place where I always have conflicting voices in my own head is when it comes to speed. I think when it comes to speed, there is, my own sense is that the slowest part of the chain, or the piece that is going to dictate speed the most, is actually the compliance requirement. I
Correct.
think technology is going to make it possible to do real time payments in any rail, whether Swift or stablecoin. I think the key is how can we work on the AML, KYC compliance, and all of that in a way where we can actually reduce the time it takes to do that. And I think there is potential in stablecoin to do that, or any sort of decentralized ledger, provided we have some common standards of AML, KYC standards, and all of that. So I think that is an exciting space to watch over the next few years. There will be a lot of action there. I'm seeing a lot of regional action in a place like Singapore. In Southeast Asia, the MAS is working with a bunch of regulators in the region to see how they can actually take advantage of decentralized ledgers, and be able to sort of exchange information along with money. Like the value of the ledger is essentially not just moving money, but moving information. And through that, you can actually speed things up in a much more impactful way. So for us, like stablecoin for sure is an area of a lot of interest. We are constantly talking to and working with a bunch of our customers to see what are the use cases they would like to see us support. And given we are B2B in that sense, we may lag a little bit from, let's say, the P2P players, where we are seeing a lot of action already in India. It's a little bit in the gray, but there is definitely a bunch of action going on there. But given we have to support businesses, and ultimately, like we spoke about earlier, we have to solve for their compliances and all of that. I think we may, in that sense, given we are focused on B2B, be a little bit of laggards, but we definitely see the potential in a lot of those things. Even like Indian businesses going global, like the outward remittances from India, or we're seeing more of this. Interestingly, since the last few months have been a little more tumultuous in the cross-border space overall, not just payments. Many people have asked me if that has led to like fewer businesses going global, but I actually haven't seen signs of that just yet. I actually see more signs of more businesses going global and dealing with what's coming their way. So I think it's going to be interesting few years where you'll have this amalgamation or the confluence of more businesses going global, more trends coming which help make businesses going global easy. There's a bunch of companies in like the logistics space that make it easy to ship goods internationally. There's the payment experience piece, which is critical to making that whole thing work. There's treasury management. Once I have entities all over, where again you'll see Xflow provide a bunch of solutions around that as we build out the treasury side of our product suite. So there's going to be a lot of different pieces of the puzzle that come in together, which I think will be very interesting to watch. So you guys are definitely ahead of the curve on looking at cross-border payments. I think the next 4 or 5 years, there's going to be a lot more content for you guys to cover.
Awesome. We look forward to it, Anand. And then my last question is, what does a cross-border nerds nirvana state looks like in India from the point of view of a business exporter receiving money from, say, US, Asia, any other geography?
Yeah, our North Star has always been to make it as simple as a UPI payment. So if I send a customer an invoice today, customer, let's say, is in the region where the time zone matches, right? For the sake of this example, they see it, they click pay on their phone, and the payment is credited instantly to the merchant right away. Like the B2B or M2P or P2M sort of payment experience today that exists on UPI, that should be how easy it is. Like all the complexity will continue to be there. It's impossible to have international payments without checking for AML, KYC, and all the other pieces and seeing whether this is some kind of terrorist financing. Those checks have to be there. But I think like the nirvana state is where all of these are happening in real time in the background. Like the merchant doesn't have to know all of this; it just seamlessly goes through, right? So for me, B2B cross-border payments, Nirvana place or a North Star for us is, can we make the experience mimic what today's UPI experience is for merchants? I think if we can do that, life would have come a long way. And of course, we solve for all the post-payment compliances also as easily and all of that.
Anand, this was an excellent conversation with us today. It's a great reminder that behind every global business, there's a surprisingly complex ecosystem and web of movement of money. Thanks for spending time with us today.
Oh, my pleasure. Thank you so much for having me.
And to all the listeners, thanks for tuning in to India FinTech Diaries. If you enjoyed this episode, do subscribe and share it with others in the ecosystem. We'll be back soon with another conversation from the frontier of Indian FinTech.